Hello and welcome to CNBC-TV18's Mumbai News Center. I'm Sumaira Abdi and you're watching your stocks. Well, for the market, the high for the day that we had made till noon, we've been unable to sustain and just been steadily moving down, lower. So what do you do with your stock holdings? Joining in to advise today, we have Rajat Bose of RajatKBose.com and Shahina Mukadam, an independent market expert. So good afternoon to both of you. Our first query comes in from Palakkad in Kerala, and on the line we have Mr. Praveen Kumar. Hi, Mr. Kumar. Good afternoon. How can we help you?
Hi, good afternoon, ma'am. I am Praveen Kumar from Palakkad. First of all, thank you for having me on your show.
Sure, sir. Our pleasure.
I purchased CG Power at the rate of 50 rupees per share after it was taken over by Murugappa Group in 2020 November. Unfortunately, I bought only less number of quantity, only 10 numbers. Same in the case of Endurance Technology. Bought only one share at the rate of 1,150 per share. Ma'am, I just want to know whether I can buy both these stocks at the current price for a longer period. I mean, 2 to 3 year time frame.
Okay. Sure. Shaina, first to you.
Well, what I would suggest is that he does not add either of them as of now. CG Power looks decent if he can add it on slight dips. I would say he can hold his current position for now. Of course, as you mentioned, after the takeover, there has been a substantial improvement in performance. And I think in terms of valuation, it is decent. But do wait and add on dips because of the overall market, which is showing slight bit of weakness in the shorter term. As far as endurance goes, I don't think you should add any further. In fact, my suggestion would be that it is better to book your loss and move out from endurance. Basically, loss or book your profits, I should say. Basically, a large client of yours, Bajaj Auto, is going through a slightly tough time in its exports, and Bajaj Auto is a major client accounting for I think more than three-fourths of its revenues. So I don't think you should add endurance anymore. In fact, exit.
Okay. Rajat, what about you? What is your recommendation?
Good afternoon to you, Sumaira, as well as to Saina, and also to all the viewers. Happy Navratra. I would start with CG Power. CG Power for the last few trading sessions has been falling. It has been falling from above 260 levels, and currently it is testing its 20-day moving average of today. I quite agree with Saina that it should not be bought right away. Test its 50-day moving average, which is around 227. If 227 is also taken out, then I would suggest that you wait, because in that case, the recent low that happened at 220 on 8th of September, that might also be taken out. In that case, buying close to the 200-day moving average around 190. So what you are doing is, if it doesn't fall below 227, that is its 20-day moving average, which has given ample support earlier, then you are buying around those levels. Otherwise, if it were to fall below 220, in that case, you wait a bit and buy it on further fall below 200. Between 200 and 190, you can again buy CG Power. Regarding endurance, the same opinion even I also hold about your endurance is one stock that is actually trying to break its 200-day moving average around 1400. If it were to fall below that, it will go down further, and possibly another 200 point might be shaved off. So my suggestion.
Okay, Rajat, we heard everything but your suggestion, so maybe we'll come back for it in a bit. But Mr. Kumar, you have got the gist of what our experts were trying to say. The next query today is coming in from Sunil Kumar, who has written to us from Vizag in Andhra Pradesh. He has 250 shares of Mangalam Cement at 497. He's making losses currently. So wants to know what he should do. Does he remain invested, or does he book losses right now and probably look elsewhere? Shahina?
No, I would continue holding the company even as of now. A small cap cement company, hardly the market cap is just slightly over 1,000 crores. There, I believe the sentiment is very positive. Secondly, by itself, the company is doing well in terms of numbers. And with a small capacity of 4 million tons, the valuation is not expensive at all. It's just even after the run up, it's just about $60 EV per ton. So I would continue holding Mangalam as of now.
Okay, we're still trying to reconnect with Rajat. So let's get the next query, which is coming in from Pranav Lamba. He has written in from Lucknow. He has 800 shares of Berger Paint at 794. So he's making a big loss right now and he wants to know what should he do. Again, the same question. Does he remain invested in the hope that things will turn around, or should he book losses and shift elsewhere? Shahina?
Suggest he books his loss and switches elsewhere. I think there are a lot of other sectors, other companies which are doing much better. In paints, the most preferred bet I would think would be Asian Paints, or other sectors if he wants. Maybe he can switch to maybe an ITC, even Indian hotels. The problem with Berger Paints is not the company per se. They are doing pretty okay, double-digit growth, but this is lower. The growth that the management has guided for FY23 is lower than what they used to enjoy in the earlier years, 35-40%. So that is an issue. Secondly, if you go in terms of little longer term, a lot of new competition is coming into the segment. So I think the growth as well as the margins, because of higher costs, are likely to remain compressed. So I would switch from Berger Paints, but I don't have any problem with the balance sheet per se.
Okay, Rajat is reconnected with us. Rajat, the query is on Berger Paint. The investor is making a big loss. He has 800 shares at 794. What would you recommend?
I would say that Berger looks pretty weak. I would suggest getting out of it, because if it were to fall below the recent low, which is around say 620, then it can actually move further down. And on the way up, any recovery would be resisted between 650 and 675. So better to exit if it were to fall below 620, or else if it fails to take out 650 to 675, then the investors should exit the position.
Okay, Arjya Roy has also written in to us, and from Kolkata. She wants to invest in Reliance and HDFC. Now wants to know if this is the right time. How are these stocks looking for a fresh investment? Rajat?
I would suggest him to wait. My fellow Kolkata investor would do better to wait, because even though Reliance is a very strong company, it posts very good performance, it is launching its Jio 5G in Orissa, all that is fine. But then technically speaking, there are date crosses, in the sense that 9-day, 20-day date cross is happening, which actually might even save off another 100 points from the current levels of around 2350 or so. So you wait, buy it around 2250, and that too buy in a staggered fashion. Don't buy the whole quantity right at one go. So Reliance, in my view, one should not be attempting right away. Regarding HDFC, I would say also in a similar situation, and especially when the RBI monetary policy announcement is due later next week, this week. Let this monetary policy come. Let's see how the financials behave. Then only you get into this, not right away.
Okay, Shahina, what about you? What's your recommendation here?
I believe both these stocks should be part of one's portfolio. Buying in a staggered fashion, as Rajat just suggested, is a very good thing for large caps, and one should do that. But I think both can be added, maybe at dips. Reliance may face some issues in its refining because of lower crude oil prices by the end of the quarter. But I think Jio is doing pretty well, and with Vodafone going into further problems, they should gain further market share. You have retail, which is doing pretty well. So all segments are firing well. In terms of HDFC, while the first quarter numbers were below market expectations, I think a 16% growth is not bad by itself. And with the merger of HDFC Bank, I think it's going to become into a very strong conglomerate. So I think both these stocks should be part of portfolio. Start buying in smaller quantities.
Okay. On that note, we're going to take a very quick break, but our two experts are going to stay on with us, and we'll be right back to answer more queries. Stay tuned. Hi, welcome back. You're watching Your Stocks. Our two experts are with us, Rajat Bose and Shahina Mukadam. So time to answer our next query. Narinder Singh is on the line with us from Pune. Mr. Singh, good afternoon, sir. How can we help you?
Good afternoon, Samira. Thank you very much for taking my query.
Sure.
I'm a long-term investor with minimum 3 years horizon. Capitalizing on the China Plus One PLI scheme and the ongoing fall in the market, I desire to invest a total of 3 lakhs in one or a combination of the two below stocks, namely Tata Chemicals, Aarti Industries, or Lakshmi Organics, or any other one you feel is the best.
Okay.
Kindly advise which stocks I should invest along with the entry price.
Okay,
Thanks.
fair enough. Thank you very much for calling again. Shahina?
Well, of the stocks that he's in, the investor has requested advice on, of the three, four, I would prefer Tata Chemicals as the top of the pick. Basically, major part, 75% comes from chemicals like soda ash and caustic soda, where because of the very high prices that were there in the first quarter, they reported a very strong first quarter. Now the prices have corrected a bit. So second quarter on a quarter-on-quarter basis may be slightly weaker, but all the same, I think on YOY basis, the trajectory is up and the company is likely to do pretty well even in the second quarter and year going forward. The company has huge plans for diversification, for expansion of product portfolio. So and specialty chemicals also. So I would recommend Tata Chemicals as the first pick. Second of the lot, maybe in a chemical company, you can go in for Deepak Nitrite. There, while the first quarter was below market expectations, I think they are very well prepared in terms of capitalizing on the growth in specialty chemicals. India has an advantage, as China is now not becoming the preferred destination, the preferred bet for sourcing. So I think he can go in for these two.
Okay, Rajat, what about you?
I would suggest buying into Deepak Nitrite and Lakshmi Organics because they have corrected and they haven't shot up much. Tata Chemicals fundamentally it might be the best, but the problem is that Tata Chemical is showing a huge distribution. That means if the market were to turn weak, Tata Chemical might fall quite a bit. On the contrary, say stock like Lakshmi Organics and even the other stock that he just mentioned, that was, I think.
He has Tata Chemicals, Aarti Industries, Deepak Nitrite, and Lakshmi Organics.
Deepak Nitrite, I would suggest Deepak Nitrite also. And regarding Aarti, Aarti is falling very sharply. It has come to a support level around, say, 780, but going by the trend, it can actually move even further down. So instead of getting into Tata Chemicals right away, whose corrections have not yet happened the way it should have as per the technicals, I would suggest buying into these 3 stocks. And again, I would suggest him to buy in a staggered fashion, because if he is patient, maybe in October and November, especially in October, chances are that you would get these stocks at reasonably cheaper prices.
Okay, so Mr. Singh, that's the advice for you. Thanks very much for calling. The next query comes to us from Satish K, who has written in from Kerala. He has 500 shares of Nelco at 380, 600 shares of Tejas Networks at 494, and 400 shares of Federal Bank at 88. Now he wants to know how his portfolio looks like at the moment and whether any changes are required. Rajat?
So let's take Nelco first. If he's a real long-term investor, when I say real long-term investor, I mean that he would be willing to wait for 5 years or more. In that case, there is nothing to do. If he is a short-term investor whose horizon doesn't extend beyond 3 to 6 months, in that case, I would say that close to about 800 levels, if it fails to take support, then one should get out of Nelco. Regarding Tejas, I would say that this stock is showing strength. In today's session also, it is actually, it has moved up. One should continue to hold. Do not add a phrase at this juncture, because there is every possibility that all the indices and other stocks are moving down. Even this might also come in for some profit taking. So hold here. And regarding Federal Bank, I would say that you don't buy right now, you buy it later. Say around, if I were to buy Federal Bank, I would buy it close to about 104, 105, and I would have a stop loss below, say, 90 for long term. And between 104 and 100, there would be adequate support, and that is the level when you should get into Federal Bank.
Okay, Shahina?
Making good money in his portfolio on all the three, and I suggest that he continues holding all the three. Nelco, of course, because of its recent tie-up in the last 6 months for its services, Aero IFC services, the stock has done very well, and prospects are very strong going forward. So one can continue holding. Tejas Networks, with the government push in terms of rollout of 5G, I think the prospects there also, especially in the rural segment, expansion of the network will involve laying cables, and that should be a positive for them. Federal Bank valuations are very attractive, price to book 1 time, CASA around 38%. I think it's one of the strongest in the the smaller private sector banks. So one should continue holding all three. In fact, all three remain buys also.
Okay, up next, the query comes in from New Delhi. Tej Kumar writes in. He says he has 150 shares of Sri Renuka at 66 odd. He's making minor losses right now. But for the long term, is it advisable to remain invested here? Shahina?
I would suggest that he switches. The stock has given a very sharp up move in the last couple of months. But I think the up move is not, it doesn't sort of correlate with the stock, the financial performance. And while the company management is talking of expansion, very big expansion, there is definitely demand increasing for ethanol. The refinery business likely to do well. They're refining for ethanol, but at the same time, the balance sheet is extremely weak. And given the huge stock run up in in the last couple of months, loss-making company, I would, that is not my preferred pick. I would switch.
Okay, Rajat, you agree?
Shahina, if it were to fail to take out 63 decisively, despite the recent strong run with a lot of heavy volume activity, then there would be a double top formation that would be in the making. And if you look at it, even in the month of April, this stock showed a similar run from 36 to about 63, and then fell again to close to about 42 kind of levels. So I quite agree with Saina. Bereft of strong fundamentals, one should actually book profits and not hold on to it.
Okay. The final query today is coming in from Mohit Mehra from New Delhi again. He says he has 500 shares of Raymond at 420. He's a long-term investor here. He's already making money, but he's keen to know if he should, buy some more. So basically, he wants to add at this time. Rajat, is it a good opportunity?
Which stock?
Raymond.
Raymond. Okay. Raymond has been on a tear all these days. I mean, it moves up, then comes down. But overall, if you look at the long-term trend, it is still going up. So such kind of a counter, if you are not buying afresh, then there is every reason to hold it. If you are trying to buy afresh, then please wait. It would be a much better buy between, say, 940 and 900, and put a stop loss below the current 200-day exponential moving average level of 848. So put a stop loss below 850 on closing price basis, buy it between, say, 940 and 900, that would be a good buy area. That is it.
Okay, Shahina, you have a recommendation on Raymond?
I would agree. One can look to buy at dips or even continue holding. Keep stop losses. Basically, a lot is happening both on the real estate front as well as in the core textile business, their shops. So I think one can continue holding Raymonds and buy at current levels or at or at dips.
Okay, Shahina, Rajat, thank you very much to both of you for joining in and advising our viewers. We're going to wind up on your stocks for today, but thanks very much for watching and stay tuned. The team of Closing Bell joins you next.